Good afternoon, everybody. Welcome to today's webinar. Thanks for joining us. My name's Dan Cockerton. I'm the founder of the Digital Accountancy Show. We are a technology conference for accountants, bookkeepers, and tax professionals. We're due to host the event at the new Tottenham Hotspur Stadium. Unfortunately, we had to postpone last year's event for obvious reasons. We had 3,000 people signed up to it. And we will be moving that event it's currently booked in for the 30th of June this year, but we'll be moving that back to later in the year, and fingers crossed that all goes ahead. So thank you so much for joining us. If you haven't signed up to Digital Accountancy Show, head over to digitalaccountancyshow.co.uk and please sign up, and we'll make sure you're updated with all the new dates. I'm really excited about today's session. Personally, I've been involved in cryptocurrency for 12 months now or so. It's a really interesting, fairly explosive space. I'm sure you've all seen the rate at which the cryptocurrencies have been increasing in the last 12 months. In 2021, I'm led to believe the market cap has doubled in size. And just from a user and people getting involved in the space, the number of people now involved in this area is just increasing on a day-by-day basis. And I'm sure the current price has a lot to do with that. So why I thought it was important to put today's session on is, as an investor myself, I didn't really think about the tax implications of cryptocurrencies until I started doing my latest tax return. And I felt like, well, if I'm in this space, then there's going to be a load more other people in this space. And as we start to see investors diversify their fee portfolios into this area, and as accountants and tax professionals and bookkeepers, we are likely to see more of this happening where clients are getting involved in this space. I felt like it was really important to put on a webinar to help people understand the basics of taxing when it comes to cryptocurrencies. And we're going to talk to Joe a bit about that, and we're going to talk to Dennis a bit about what Accointing does as a bit of software as well, which is really helpful when it comes to working out the gains and losses in cryptocurrency. So the way in which we're going to run today's webinar, we're going to have a real mix of people on the call. We're going to have people who are kind of looking at this for the first time, and we're going to have people that are a bit more experienced in this space as well. So we're going to do our best to make sure we cover kind of both sides for people. So the way we're going to start, we're just going to paint the picture a little bit for you for 5 or 10 minutes, just to talk about what the common challenges and pains that we see in the market when it comes to crypto accounting and taxing from a cryptocurrency perspective. Joe's going to touch base on the basics from a taxation of cryptocurrency. We're going to be looking at kind of capital gains versus kind of business income. We're then going to go into a bit about DeFi, decentralized finance, and the opportunities that DeFi and in crypto presents, and what the tax implications are for that. And then we're going to kind of hand over to Dennis to talk a bit about Accointing and how his product solves some of these problems. So before we go any further, and before we kind of get into the conversation, Dennis and Joe, can I just ask you guys to introduce yourselves and give the people on the call a bit of background? Joe, can we start with you?
Yeah, perfect. Thanks, Dan. And just quickly, Jeff, and I know a lot of other people, Jeff's asked a question already, we will get a recording out. Dan will make sure that that comes out for everyone that's asking, which will probably be quite a lot to take in. So yeah, hi, I'm Joe. Some of you may or may not know me from my accountancy practice, Nefos. We're a digital firm based in the Southwest and help a range of clients. About, I don't know, 3 weeks ago now, we launched our sub-brand, if you like, sister company, Myna, which is a dedicated crypto and blockchain business advisory practice. So our aim is to support retail investors, so the likes of Dan, who's got his own portfolio, be able to calculate the right amount of tax, and then also help businesses that are in the blockchain and crypto space. So we've worked with a couple of exchanges and a few other businesses as well in the space, but also we want to help accountancy firms. So what we want to be able to do is support you guys to support your clients, and we'll touch on that a bit more later. So yeah, that's where I'm from, and I'll hand over to Dennis quickly.
Yeah, I'm Dennis. Thanks a lot for the introduction, Dan, and for painting the picture. So I founded, or I'm a co-founder of Accointing. We started Accointing 2.5 years ago, after we realized that we had to somehow keep track of all the transactions we did in crypto. So I'm involved in the crypto space since 6.5 years now, and was trading on different exchanges, different wallets, was in the ICO bubble in 2017. And at some point I had the problem because I realized, oh, like the government wants to see some records of this, and I need to somehow consolidate all of the transactions I made. So what I did back then, I tried to find a accountancy firm that helped me with this, but that was not that easy back then because no one really knew about the regulations and how cryptos are taxed or how you have to keep the records. And so at some point, I just ended up doing that by myself together with tax lawyers. We ended up like working together in Excel files and putting everything together. And after this experience, we realized, okay, we have to build our own software for this. And out of that, we started Accointing.com, and it's basically just a software that helps you to bring all the exchange connections, all the wallets, your entire ecosystem around crypto together in one place, where you have a dashboard, you can have a full overview of your transaction history, fully automated, and then create tax reports in the end. So we go deeper into that later, and I guess as a quick introduction, that should be enough.
Thanks, Dennis. In terms of Q&A, guys, there is a Q&A tab within Zoom. If I could ask you to use that to put your questions in, it's quite hard to manage the Q&As in the chat box. So if I could ask you to put those in the Q&A. Joe and Dennis said, well, if something's kind of relevant right now and we're all keeping an eye on that box, then we'll answer it as we go. Otherwise, we'll hold it to the end and we'll run through a Q&A to the best that we can. So in terms of, guys, let's get started. So in terms of painting the picture, common challenges, common pain points, and kind of where the market is going in general, I think I'd just like to start off and say, for me personally, I feel like we are getting kind of mainstream adoption of cryptocurrencies now. I know back in 2017, 2018, there was a big boom bust cycle when the market fell by 80%. I think for me, what's slightly different this time is the amount of support cryptocurrency is getting from some of the world's largest financial and technology companies. And we've seen in the last 6 months, people like Elon Musk and Tesla come out and show their support for Bitcoin. And I don't know if you can now, but you certainly will be in the future to buy a Tesla car in Bitcoin. And when you start hearing things like Visa, MasterCard, PayPal, BlackRock, the world's largest asset management company, advising their clients to buy this stuff, you start to think, is this the start of a complete restructure of the global financial system? And I don't know, it's starting to get really interesting, and we're starting to see some quite exciting growth. And we heard, I think it was last week, Rishi Sunak come out and announced that he has set up a task force for the Bank of England to research and deploy central bank digital currencies, or a CBDC, for the Bank of England. And other countries are already there with that. So we've got the likes of China already have their central bank digital currency. So for me, it feels like it's all going in this direction. I'm sure there'll be booms and busts and cycles involved, but it's starting to get really, really interesting. Joe, Dennis, would you add anything to that in terms of where the market is going, just to kind of actually why this is a particular of interest right now?
Just quickly on my side, I think I touched on it down with you just before we joined. Like, it's not just the fact that you can buy a Tesla. You can in the US buy a Tesla with Bitcoin. You can't in Europe yet, but it's the fact that these companies are saying that they will maintain these assets on their balance sheet, which I think is really important, because it's easy for us to say we'll accept and convert immediately back to fiat, GBP, USD, whatever. But actually, to say that we're going to hold this asset, I think is really, really important. Mark Cuban, he's a big advocate of crypto, and he owns the Dallas Mavericks, among many things, an NBA side in the US, and he's accepting crypto. And again, he's accepting that for shirt sales and merchandise and ticket sales. And he even mentioned on a podcast I was listening to, who that he was willing to look at doing their ticket sales through like an NFT type model as well. So yeah, there's a lot of stuff going on, and it's not just the weird and wonderful now. It's actually, like you say, it's the mainstream.
Yeah, I think what's quite interesting is that the blockchain technology in general, like it can be used in so many different applications, so many different areas, whether it be kind of agriculture and farming or supply chain, or store of value is the kind of Bitcoin narrative. I think it's starting to get really, really exciting, really, really interesting. And yeah, it's only kind of increasing. So from a kind of investor personal tax point of view, Joe, what are some of the questions or main challenges that you're seeing in the space?
So yeah, I mean, I've got a bit of a slideshow. So do you want me to go through that now, or do you just want me to talk about some of the key points first?
Yeah, so I suppose like I mean, apologies if you cover this in your slide. I think like a couple of the pain points that or challenges we see in crypto is actually the number of transactions that is executed off the back of one trade. And again, if you're going to go into this, and we'll quickly go into that, and the fact that you can go from crypto for crypto. But having kind of looked over your slides now, I remember that being in there. So why don't we kind of swiftly move into your slideshow, if that helps?
Yep, absolutely. Let me just get that on my screen.
One thing that is very important to understand about crypto and the environment and how this all develops is, if you look back a few years ago, it was only Bitcoin and people saw it as only store of value. And like you said, maybe a way of paying goods with it. Now it basically just converted into an ecosystem that allows you not to only store value and to send transactions to pay for any goods. It's also all the services that we have on top of this now. So there's all sorts of banking services fully automated in crypto, on Ethereum, on a Binance Smart Chain, in these different ecosystems. That obviously makes it harder to keep track of everything because you don't have a middleman in there. Like in a normal banking system, the bank is your middleman. They know everything about your transactions. If you buy stocks and you send those stocks from one bank to another bank, they transfer the cost basis, the buy information to the other bank. If you go into crypto and you buy something on a centralized exchange like Coinbase, then you send that money from Coinbase to Ethereum, you trade on a decentralized exchange like Uniswap, you maybe take part in a liquidity provider, or you lend money from someone, fully automated on the blockchain. That's something where an entire, like this middleman is missing here. So the big problem and the big challenge is to kind of keep that overview and make sure that you know where the money flows and how the money flows for a single person. Because there's like no exchange will give the information to the other exchange. And then in the decentralized world, it's completely anonymous, like some sort of anonymous system where you have to somehow keep track of all of this. The great thing about this ecosystem is that you can take a look into every single transaction on the blockchain. So that allows our software and that allows Joe to go really deep into the cash flow of every single person's investment and kind of make sure that we know where the money flows to for the client, and then keep track of the different cost bases, the pools with the 30-day rule and all of this. I guess, Joe, you will have all of that in your presentation, just to kind of give a broad overview about why this ecosystem is different compared to the old world.
Yeah, and I think you raise a really good point there, Dennis, from a transparency point of view. People's mindset towards cryptocurrency, because it had some bad press in the past, is that this is a kind of a hidden away financial ecosystem that no one can get access to. Where actually a blockchain is a public blockchain. Anyone can see the transactions that are taking place. So actually it's the opposite, which is why I think this space is getting a lot of attention as well. And why potentially we might see kind of mainstream kind of currencies being run on these blockchains in the future, like with the CBDCs. So every transaction is monitored and recorded on a public blockchain. So yeah, let's see where that goes.
Yeah, and I think it just as we're talking, sorry, Dennis, as we're talking on that, one of the questions in the Q&A is that given that Bitcoin and other crypto were designed, if you like, from the outset to be decentralized, we talked about, Rishi Sunak mentioning about a government-backed coin, and this person's asked, does that not defeat the purpose? And I think a lot of hardcore cryptos would probably agree with that it's not kind of the point of what they may be set out to do, but I think it also shows where this space is going, and that the future is not what we've got today, and what we've got today is broken. And I think that highlights that even more, that the government are even considering it. But I think, Dennis, you've been in it a lot longer than I have, but I think you'd agree that maybe some of those hardcore early adopters maybe think that a government-backed coin is probably defying the point of the decentralized nature of it.
Yeah, but it's also very important to have. If you look into the decentralized world, and I think more and more people start to agree on that, is if you just take Tether as an example. Tether is on the blockchain, but it's centralized in a way, right? There's a point of entry and there's a point of like stabilization of that currency, and it's very important for all sorts of traders to have a stabilized, like some sort of a stabilized currency. And if you want to back that with a dollar or with some other currency that a country also accepts as a thing of tax payments or anything else, it's very important for the market to grow. So I think there's no way in kind of defeating that and going against that, because that will just allow us to have more and bigger adoption in the space. So that's something 100% true. There's a few coins still like Monero and these kind of coins that are like privacy focused. You can't really look into their blockchain system. It's not readable from the outside. So that's very interesting as well. It has definitely a purpose, but if you compare blockchain like Bitcoin as the blockchain or Ethereum with cash is way less transparent than the blockchain. Yeah.
Great, thanks, guys. So should we jump? There are some more questions, but if we answer the questions as they come in, I don't think we'll actually get through the bits and pieces we want to talk about. So if everyone's okay, we'll jump onto the presentation if that's okay with you, Dan, and then we'll go back to some questions in a minute. But keep firing them through, guys. So I'm going to talk through in a fairly basic sense. Can everyone see my screen?
Yeah,
you can, Dan. You can, Dennis. Yeah, cool. I'm going to try not to go into this in too much detail, because there's a significant amount of information here that we would need to go through. So I'm going to just try and cover the main points, and I am happy to answer some questions towards the end as well. So yeah, just a quick one. Who am I? So like I say, I'm Joe, founder of Myna, and our background is in the fact that we've worked with many businesses and individuals on their crypto stuff, and not only that, I'm an investor and an individual that is really invested in this space financially, but also in the sense of learning the space and understanding the space. So it's not just someone that has seen something from the outside looking in. I'm doing a lot of the transactions that these people are doing. So I actually recorded a podcast yesterday. I said just that, I'm in a space where I can niche into a space, but actually really do a lot of the stuff that other people are doing, meaning I can understand exactly what they're doing. So yeah, so just quickly, who are we? We're one of the first UK's first crypto accounting and advisory businesses to focus solely on that as a business. And for anyone that shouts at me, we're not the only one. I'm saying we're one of, because someone shouted at me about that the other day. But our difference for us is we're not focusing solely on individual taxation. We're focusing on also business use of crypto and business application for this. That comes in consultancy with accepting crypto, how to transact crypto through your balance sheet, etc., etc. So this isn't just around, for our business, this isn't just around UK individual tax. This is worldwide adoption of blockchain and crypto. As I said, we're part of the Nefos brand, business I set up about 7 years ago, fully digital practice. And yeah, like I say, we've worked with many different clients, from exchange platforms to individual investors. So just quickly then to go through some of the differences here. And there was a question around capital gains and business income from a trading perspective. And the next two slides are going to go through that. So simply put, cryptocurrency is seen by HMRC as a digital asset and not a currency, and therefore it is taxed under capital gains tax rules in the majority of circumstances. And what that means is that any sale or disposal of a cryptocurrency is classified as a taxable event, and this would include any disposal, like I say here, which does include the use of crypto to pay for a good or service. So if we took the Tesla example, if you did have 50 grand in crypto that you wanted to go and buy a Tesla for, you purchasing that Tesla will class as a disposable event of that Bitcoin, for example, that you've used to purchase that Tesla. The other really important point to note is, and again, this was asked as well, it is crypto to crypto is taxable. Any disposal of a crypto is classed as a disposal. So you may be holding it in fiat within, so that's GBP, it's typical kind of government-backed currencies. You may be holding it within your exchange as that, government-backed currency, and not in your bank account, but that is still a taxable event at the point of the crypto to crypto trade. So that's really, really, really important to note. And the key difference I put underneath that to shares is that you can't trade Apple shares in the mainstream. You can't trade Apple shares for Google shares, whereas you can trade Bitcoin for Ethereum, for example. So there's a big difference there, that in a share world, you'd have to sell down your Apple shares into GBP or USD, and then use those funds to go and purchase another asset. But in the crypto space, we can exchange those assets for one another, and there is a taxable event.
Can I just jump in here, Joe?
Yeah.
For me, that's the biggest kind of concern for crypto investors who are not experienced in this space, the taxation part, because what we do as investors, we've just seen a big gain in Ethereum or Bitcoin or whatever cryptocurrency that we have. We then hear a rumor that this other cryptocurrency is about to explode, but you can only buy it with Ethereum. People are moving their Ethereum straight into this new currency or alternative currency, and that's a taxable event. Yep. Really, what they should be doing is, right, what's the profit I've made on that? Cash some of that out, keep it aside for tax later on. And then if this cryptocurrency kind of falls through the floor, and they don't want to kind of come out, for me, that's the single biggest kind of concern for retail investors.
Yeah, I think it's the single biggest misconception, I think, as well, that because if you're not fully invested in the space and you don't fully, therefore, understand the complexity, like you just said, Dan, of, you can purchase cryptocurrency in, many other versions of currency, as well as things like USD and whatnot. So it isn't just a case of, like you say, converting back to a stable currency and then using that stable currency to purchase another coin. And some coins, as you say, are built on maybe the Ethereum platform or what have you, and they will require you to use Ethereum or what have you. So yeah, it's a huge misconception. And it's a huge misconception that even if the funds are held in GBP, for example, within your exchange, they are still taxable. And I think, people need to be aware of that, because you could get a gain position. You could then see a huge market crash because there is huge volatility in this market. You could see a big market crash, and you could be left with a taxable position with a minimal or a lower lump sum, in the exchange. So it is something that really needs to be thought about. It isn't for the faint-hearted. You've got to really understand what you're doing. But yeah, really important point to highlight. So thanks, Dan.
And just to clarify, Joe, as well, is it's not just when you go from cryptocurrency into fiat, because we've heard that as well. That's not right.
No, it doesn't. Effectively, it doesn't matter what you do with those funds. As such, it's any disposal of those funds, crypto to crypto, crypto to fiat, crypto to sale, to purchase of a good or services. Whatever you do to relinquish yourself of the ownership of those funds, that becomes a taxable disposal in a simplistic term. Obviously, there are different rules and regulations around a lot of different things, but yeah, in principle, that is the rule. So yeah, it is. Yeah, as you say, Dan, that's the case. I can keep seeing the questions flashing up. So I'm not looking at them because obviously I'm on the slide, but guys, if there's anything you want me to answer, please do shout. Gains or losses then calculated on the sale of your crypto are very similar to what would be of share disposals. So the cost of acquisition and the cost of disposal will be your cost base. Network fees. So the Ethereum platform requires quite high at the moment network fees into exchange, so that they can be taken into account, as well as any exchange fees on a Coinbase, as example, platform that they charge you to be deducted from the sale price, which is fairly straightforward for most people. And the CGT rules are very similar for those of shares, in that you've got the same day rules, the bed and breakfasting rules, 30-day rule, etc., etc. So I won't bore too much around those rules at the moment. I know we'll probably have a mix of accountants and maybe retail investors on this call, but happy to talk through any individual circumstances with anyone, separately. But in principle, the similar share rules we currently operate on are the rules that operate in here. And again, the CGT allowance is the same as it is for kind of physical assets, which is the 12,300 there. So again, very quickly went over capital gains. So if we then go over income, so again, this was a question that was asked. So it's going to be very, very limited circumstances at the moment that any retail investor is going to be classed as a trading business for the purpose of tax. And that means that majority of people will fall under CGT rather than income tax. HMRC have stated on multiple occasions that they don't see very many people being classed as traders, and they think it will be exceptions rather than the rules. And there is a very high bar there, as with HMRC, there is no actual bar. So it's just a case of what you believe, I guess, in one sense. And they've also said they're not, at the moment, they're not willing to kind of give sign off or approval of trading status. So it will be a case of playing it by ear in one sense and seeing how this develops. What they have, for example, though, said is that, a basic transaction list could easily hit 5,000 trades in a year. I'm sure Dennis can give us an example of some significantly high thresholds probably on this. But my point there is, someone might look at a 5,000 transaction trade year and think that that's a high volume, because in share transfers or what have you, it probably would be. But in the crypto world, as Dan said, one exchange could be 50 actual matched transactions in order to make that trade happen. So 5,000 trades is not a lot in this space. So we are really talking a high level. But also what they want is someone that is doing some real sophistication in this. So it isn't just someone going on Twitter, reading a tip and going and buying a crypto. This is someone that's got a lot of market analysis, someone that's really in the space really heavily and really knows what they're talking about, not someone that's just doing a bit here and there is the key there. Don't know if there's any questions on that, Dan, while I'm finishing on that.
There are, Joe. What I might do is kind of let you go through some of these, and when Dennis is presenting, to give you the time to get through them.
Fine.
And we'll do that.
Yeah, fine. Okay, so some other points then to know: lost keys or stolen funds. So exchange platforms, you will get keys to access your funds. And wallets, the same process. Any kind of digital wallet, you will be asked to create, or they will create you a digital key effectively to access those funds. If you lose those keys, and there's been many stories in the press about people losing keys, then obviously you will not be able to access your crypto. But HMRC does not consider that as a disposal. And it's also the same for stolen keys and hacks and stolen funds. At this moment in time, HMRC will say that they are technically still owned by the investor, and therefore they do not consider them as a disposal. Now, that is obviously quite tough for some people, because they may have made losses they want to deliver, and if they haven't got those, how can they possibly be involved in them anymore? But unfortunately, at the moment, they are suggesting that they do still own by the investor. And then a few bits and pieces around some of the more technical bits. So staking. Again, I'm trying not to go into too much detail on some of this stuff. It is a very technical space, but staking is where certain platforms, so Polkadot is an example of a platform which is built off the back of individuals and businesses staking crypto that they hold, which is basically locking that crypto into a platform in order to assist building the blockchain. I'm sure Dennis will go into a bit more around the crypto side of things, but the way Bitcoin was built was around the mining of the currency and mining of the blockchain. But the kind of more now we're moving towards this proof of stake mechanism, which is where staking is used to assist in the building of the blockchain. HMRC have recently confirmed that this will be classed as miscellaneous income on a tax return. So when you stake, you will receive rewards for those stakes, a bit like interest, and that is what we're saying will be miscellaneous income. Airdrops. So airdrops are a bit of a funny one, actually, because you basically, with an airdrop, you if you are normally an early investor in a project and in a token, there's quite often airdrops that are given out as a reward, if you like, for supporting that token in the early stages. Now, there's two ways that these airdrops can be given. One is that they're just given as a thank you, in for want of a better phrase, in which no actual work is conducted by the investor to get that. The second is that the user will do something and effectively earn, if you like, that airdrop. If that happens and they earn it by doing some work, there is a taxable income there, and that is supplied as miscellaneous income on the tax return. But if they don't do any work, it's just a thank you for supporting the project, then it isn't taxable. So it's a complex area again. We can help with that in specific scenarios, but it is different depending on how much work in inverted commas is done by the user. Gifting. So gifting crypto to another party is classed as a taxable disposal in the same way as selling is, and the valuation of that from a sale perspective is the price on the day of the gift, and as a cost perspective to the other person as well. So there is a taxable disposal around gifts, except for spousal transfers. Again, the same as in a lot of other CGT scenarios in the current market. You have the same allowance as your partner, and if you have your spouse not using theirs, you can transfer some crypto into your spouse, who can then use their 12,300 as well. So a couple of little more technical, well, three maybe technical slides now before I end up on the slides, but margin trading and derivatives. So I'm sure we've all heard of margin trading and derivatives in the kind of the normal, in inverted commas, financial world, and it's very similar in one sense in the crypto world. But effectively, the margin trading is where you will open a trading position on a crypto, which you effectively are doing more than you have liquid in your account. So if I wanted to buy £50,000 worth of Bitcoin, but I've only got 30,000 in my account, I can open a margin account to help with that. Now, the benefit of that is the risk is much higher because you can open a much larger position. The benefit is the reward is much higher because you can open a much larger position. But the challenge is, or the risk is, that you could also have a huge position where you owe the exchange effectively more money than you have on the exchange if the price crashes. So the rules on this are still vague, but again, we're treating these as a separate pool effectively, and we'll go into Accointing to try and explain how we're using Accointing to manage that in a short while. But effectively, we're pooling them together in a separate pool, and then CGT or income tax, depending on your status, would be applied based on the sum of those gains and losses on any margin trading and derivatives, etc. DeFi. Dan briefly touched on DeFi, decentralized finance, and I think for me, DeFi is what crypto and what blockchain should be about. It's decentralized finance. It's a decentralized network. It's something that isn't controlled by any one person or party. Someone said to me the other day, if you own crypto on Coinbase, you technically don't own crypto because they're a centralized platform, now floated, which takes away any of their decentralized nature. Really, people would argue. So there is a huge increase now in popularity in the crypto space around this DeFi, I'd say more of the hardcore cryptos are moving probably away from the typical exchanges and onto these decentralized exchanges. We have one as a client at the moment. Products such as, so there's a lot of exchanges that will, same sort of process. The challenge with DeFi is that getting the transactions off the platforms can be a lot harder. The KYC is a lot more limited than on a Coinbase, and therefore the reporting requirements for a lot of these platforms is also very limited. So there can be challenges around getting information out of the platform. Again, we've got a lot of experience with DeFi, so we can definitely help people if they are struggling. But yeah, it can be difficult. One example of DeFi, and it comes onto the kind of liquidity pooling scenario, is a platform called Aave, which basically allows you to earn passive income on your crypto. What you will do is deposit your crypto into a platform such as Aave, and you will deposit that down for use as collateral against people that want to borrow off the back of your deposit, if you like. At the moment, there's no direct guidance on this, but basically you will receive income similar to what you would receive if you were doing mining or if you were doing staking. So the basis at the moment we're working on is that income will be treated the same, and therefore will go under miscellaneous income, because effectively all three of those, you are receiving a reward for some kind of work or effort in getting the platform, using your funds to use the platform. So I think, yeah, I won't go too far into DeFi because we could be here all day, but hopefully that gives everybody an overview. And as Dan said, I will, I want to talk on NFTs, sorry. So NFTs, I'll go over very quickly. Non-fungible tokens, these can be in many forms. Examples would be digital art, digital land. I watched a video that Dan actually sent to me more recently, where there was talk of a digital land being bought and a digital casino with an actual operating gambling license within that people could use and gamble within this digital ecosystem. There's things like collectibles, so you could collect all the Marvel characters on a digital space and present those in a digital form to your digital friends. It's a really interesting space. Again, this is hosted on the DeFi platform. And these assets at the moment, there's no guidance on it. So our current advice to anybody is that treat that as you would if you had a typical physical painting or a physical piece of land or a physical collectible, that you would effectively calculate it in the normal way, cost and acquisition, etc., against the sale price. So yeah, no guidance on this at the moment, but that's what we're taking from it at this stage. So I'll stop talking, mainly because I need a drink, and I will answer any questions as they come up. And hopefully that made sense to people. I'm sorry that I kind of rattled through it. There is a significant amount to go through, and I've barely touched the surface of some of this stuff. So please do get in touch with us. I'm sure Dan will send out our details at the end as well, but our generic email to get hold of us, one of the team is here. And yeah, please do get in touch if you have any questions, and we're happy to help. Be that with a retail investor or with an accountant. We're more than happy to work with accountants. So if you guys need us, we're here. So please do shout.
Thanks, Joe. Joe, what we'll do is, because there's been quite a lot of questions that have come in, I'll let you grab a drink and work your way through those questions. And once we've finished with Dennis's presentation, we'll come back to the Q&A parts, just so you give you time to digest some of those questions. And you may have covered a lot of it already, and just so we can come back to that. So can I leave you to kind of have a flick through and see kind of once we've seen with Dennis. So Dennis, we've talked about kind of some of the kind of tax implications, some of the challenges in the crypto to crypto, and the number of transactions that are actually happening behind each trade, which need analyzing. I myself spoke to my accountant before Christmas about, how I'm going to work this all out. He said, use a spreadsheet and kind of work it all down in there. And I was 5 minutes into the job and realized this is an impossible task. So that's where I came across you guys and was very impressed by your software and what you do. So why don't we kind of dig into Accointing a little bit?
Yeah, perfect. Sounds good. I'm going to share my screen as well. Can you see that?
Yeah.
Perfect. So like I said in the beginning, we built Accointing just to allow users keep track of all their different investments from all sorts of platforms that they might have used in the past or want to use in the future. So if you take a look at different exchanges, for example, if you trade on Binance or if you trade on Coinbase, and then send the transactions from Coinbase to your Binance account, and then from Binance to your Ethereum wallet, and you trade on and you go into different decentralized exchanges. You always have the problem that you have to somehow follow the money. And that's something we automized with Accointing, where you have, I just quickly walk through the platform in a 2-minute walkthrough just to show you what we have here in a dashboard. So you see a dashboard with an overview and a performance history, which shows you all the different gains and losses you made. I set up a sample portfolio here. See the total value of the different holdings you have. You see your net profits. You see the entire assets you hold, the profit and loss for it, the allocation, and on which exchange you have the different currencies. And when you land on Accointing the first time, you just have to connect a wallet directly with the public address, or you connect an exchange with an API connection. So if you trade on Binance or if you trade on Coinbase, you just find the exchange here, click on it, collect the API key from the exchange. We have an explanation how this works in a video, and the secret key, which is not a secret key as in a blockchain secret key. It's just called a secret key that allows us to read historical transactions. We have no trading access to it. We can only look into the historical trades and transactions. And one important thing here to understand is, and that's what Joe mentioned before, when you, for example, just create one order on Binance, a limit order, this doesn't mean that it comes in as one order in the end. Because if you think about an order book and how this works, is you set an order, for example, you want to buy Bitcoin for 40,000 pounds, and then there's half a Bitcoin that gets sold to you, and then 1 hour later, the other half gets sold to you. But the price might have changed a little bit, especially if you trade altcoins like Ethereum and different other assets directly with Bitcoin. There's always a change in fiat value. So you have to keep track of all the different single transactions and the single trades, and not only the entire order. And that's completely automated in Accointing. So when you collect the different transactions through the Ethereum networks, the exchange networks, we will show all of them here in a full history. You see deposits that come in from a margin gain, from a staking reward, an internal transaction. For example, if you send 1 Ethereum from your Ethereum network or from your Ethereum wallet to BitMEX, we recognize that as an internal one. So the big difference is on this one here, you don't have, this side here is empty, right? If that wouldn't be classified as a margin gain, then that would mean we don't know the source of that asset, where it came from. And that's very important for the tax calculations in the end, because if it's an internal transaction, it doesn't create a disposal. So if you send it from Ethereum to BitMEX, it just transfers the cost base or the pool from Ethereum to BitMEX. We keep track of it. We don't create a disposal. It doesn't create any gains. But if you, for example, use it and to sell, and you would classify it here as a payment, then this transaction here, the 3.15 Ethereum that go out of your Ethereum wallet, would be classified as a payment, and it creates a taxable event or a disposal. And with that, it creates gains based on the pool, on the 30-day rule or on the same-day rule. So that's the very basics of Accointing and what we can do. And I can quickly show how an import process works and how easy that is. So if I just use 1 Ethereum address that I have, it's actually really nice because you can name them. So you don't have to use that long 40 digit code. So you can name them. We import this. It takes a few minutes because we have to read the entire history of that wallet. We import the entire transactions. You see the different assets you hold on that wallet, and then you have the full history. If you would want to do that with an Excel file, you would have to go into a blockchain explorer like Etherscan, and that would allow you to go deeper into any single address. So this would be one address of one of your clients maybe, and you go deeper into it. You can export that, you can handle that as in an Excel file, and then you have to somehow find the cost basis for it, the fiat value on the specific date in the past. That's obviously a lot of work. That's something that almost doesn't work if you have specific amount of trades. So it's just way easier if you do that with a software like Accointing, because we have the prices in our system and we just recognize the historical prices, assign the pool, and create the tax report in the end. And if you do that, it looks like this. So we have a full overview of the capital gains, the income gains that you have. Let me zoom in. We have taxable disposals for each asset based on the classification you used to buy and sell that transaction. You have like the allowable costs, proceeds, the gains that come out in the end. Same thing with the non-taxable disposals. For example, if you have a no classification, like if you just send something away from your wallet, or you send it to your spouse and you don't want to, it shouldn't create a gain, it will show up here in the non-taxable disposals. And then there's a full list of all the incoming transactions based on the date, the value, the amount, and you just see the correct fiat value here. And like Joe said before, for margin gains, losses, fees, it's just separated in a separate table here, where we sum up the entire gains and losses you created with your margin trading. And then obviously all the entire history in that report, based on if it's an API import or manual import, something we can maybe go a little bit deeper into later. That's just a tag that we have to kind of allow you to also do proof of ownership with that report. And so that's the very basics. I can quickly walk through how it works with the tax report itself. So you just select the current tax here. You select if you want to file with your CPA, where we just export a few more data sets, like the entire report in an Excel file, your full data set, your complete gain transactions separately in a CSV, or you just file alone and you will get a report as in a PDF file, and you can download this. So yeah, as a quick walkthrough, do you want me to go deeper into some specific cases? Are there any things that came up in the meantime in the FAQ that we should cover, or we can otherwise just go into the Q&A? One thing to add on top of that, so we work very closely with Joe to support CPAs and to support also retail investors to keep track of their entire data set and to do the accounting. Obviously, there's a few tricks and tips that we have to kind of keep track of the different transactions and how to put that all into Accointing and to actually do the bookkeeping here. So we do have something called Actan, which is our network of crypto tax advisors. And if you want, you can just take part in here. It's completely free. We will do monthly AMAs where we explain the new features in Accointing. We explain how to onboard different things. We talk about different edge cases in crypto and how you keep track of that for your clients, and Joe can help you to onboard the different clients to educate on different tax regulations on all of this. So it's definitely very interesting. I will send this out later and you can just reach us with info@Accointing, or you go through Joe and he can help you with that as well.
Dennis, just before you carry on, I'm just going to launch. So one of the things that we're going to be doing is setting up a community for accountants, bookkeepers, and tax professionals within the crypto space, just to keep in touch what's going on from a regulation point of view, from a tax point of view, and from a general developmental point of view, where the industry is going. So I'm just going to launch this poll now, and if anybody wants to join that, then I'll make sure we reach out to you, invite you into that community when we set that up in a couple of weeks. So I'll just let that go for another few seconds before we.
Sorry, Dan, if I could just jump in. We're also launching a community on Telegram, a Myna community on Telegram. So again, if everyone is happy, I don't know what the GDPR rules are around this, but if everybody is happy when they click yes on this, to also be added into our platform as well. I'm happy to add them in, but again, if people want to leave, they can just leave, so that's no problem. But I could reach out to people after.
Okay, great. I can see that's still going up, so I'll just give it a few more seconds. So sorry to interrupt you there, Dennis. I just thought there was the perfect timing just to launch that poll.
Perfect. Yeah, and if if you want to try out Accointing, just do that. You can sign up completely for free. You can import different wallets and exchanges, use it. At some point, like before you create the tax report, we have our packages, which are based on transaction limits. So if you have up to 500 transactions, it's pretty cheap for 79 pounds a year, which is a yearly license, can print all the past reports. Then we have a trader which goes up to 5,000 transactions for 199, and then a 299 big package for more than 5,000 transactions. So you can use that, like I said, completely for free. If you're interested in going deeper into any sort of consolidation processes, we have a full review section here where you can assign internals, classify the different transfers, find out if there's any data missing. For example, if there's some holes in the data set because something didn't get imported, or you had manual transactions files that you uploaded to Accointing and there were some holes in it. There's different ways of fixing this. We can go deeper into that, I think, in a different session where we have a little bit more time to talk about the functionality of Accointing. But that's just as a quick overview.
I mean, it's a great platform, Dennis, and it's saved me. I mean, I would hate to think how much time I would have had to spend on working it all out on an Excel spreadsheet. So it's a great bit of software. Joe, if I can just come to you quickly in terms of Joshua asked a question around your relationship with other accountancy firms. So you're currently working with other accountancy firms who want to kind of outsource this type of work to you, and you have that sort of relationship. Can you just elaborate a bit more on that?
Yeah, absolutely. So the way I liken this is that we don't do R&D in-house. It's hopefully something we will do in the future in Nefos, but we don't do it at all at the moment. So we outsource that to a firm that does do it, for example. So all I'm saying to accountants here is, like, we're happy to do it in any way you like, really. We're happy to white label the solution. If you want us to deal with you directly, we can white label the solution. We can, as Dennis said, we can get Accointing set up. We can make sure all the transactions are mapped, etc., etc. But at the same time, if you just want to kind of say to the client, talk to Joe, and Joe will deal with it, and then, you know, I'll give it back to you as the accountant to do the tax return, you know, we can do that as well. So yeah, we can help in any way, same way that you might outsource any particular tax question or query that you don't know the answer to, or you don't have the resource in-house. We're here as an additional resource, and use us either as your in-house crypto people, or use us as just a, here you go, Joe, go and deal with this, please. Want to go on.
Sorry, I was just going to interrupt you there, because my second question or second poll was, would anyone like any follow-up from Joe? Because I know some people have got clients that are kind of specializing in this space, and if anybody wanted to kind of speak to Joe, then we'll be sure to send across to make sure that Joe or one of the team kind of follows up, because yeah, you might have a couple of situations or a couple of clients on the go at the moment where you might need a bit of help with. So yeah, sorry to interrupt there, Joe.
That's fine. All I was going to say, you know, an example, I mentioned again to you guys before we came on this call, but an example of yesterday, I spoke to a lawyer who's doing a transaction with a client where they've basically the purchase of a property. They're the conveyancing lawyer, and the conveyancing lawyer can't verify £500,000 worth of funds which have effectively been deposited into their bank account through trading of crypto and the profit from the crypto, and the lawyer can't verify those funds, and mainly because they are not used to the flow of transactions between all these different crypto exchanges and wallets and things like that. And as I mentioned earlier, because we're so invested in the space and we know, you know, a lot about this space, we are able to verify that for them. So we are now going through a process with their client, and the client's obviously delighted, because at this stage he doesn't think he can buy his house because he can't verify his funds. He's actually delighted now that we're going to be able to work that through with him and give that you know, clarity, if you like, to the law firm around that as well. So we are able to do quite a lot of different pieces of work around this space, and yeah, we're here to help. So anything you need, let us know.
Okay, great.
There's a lot of questions, Dan. I'm trying to answer them, but as quick as I answer them, they're coming back in.
Is there any, Joe, there that you feel could be of benefit to the wider audience that you felt like, oh, that was a good point that I never covered? Was there anything?
I mean, there's a lot of, it's hard to really narrow it down to, yeah,
Okay, well, why don't we kind of take a look at those once the webinar is over, and we can maybe put together some form of fact sheet or document for everyone, and kind of get those out in the next couple of minutes. Because I looked in there, and there's quite a lot in there to cover.
Someone has asked if they can have the slides. I'm happy to send the slides out. That's not a problem. Also, a couple of people have asked for our email address, which jumped off the screen, so I will just type that into the chat box now. Is there anything, Dennis, on the questions that you feel like you could answer? Or
I went through a few questions in the meantime here. There's a few things about Accointing in terms of converting into pounds. So we do this. We convert every single transaction and every single event on an hourly basis in the history into pounds, or if you use it in different countries in their fiat currency. So it's fully automated to just convert that back into the specific taxable currency, and we have that in the pools, and we use that to calculate the gains. But besides this, I think
there's one on mining. Just quickly, I did touch on mining, but I didn't talk about mining in a taxable taxable perspective. So mining profits will become taxable at the point of receiving the reward from that. Hopefully that answers the question, Karen Donald. So yeah, once you receive a reward, that is effectively a taxable event. Yeah, again, we've got one from Rezal. Sorry if I can't pronounce your name. Talking, he specializes in dentists, asking again how we can help with accountants. Like, yes, you know, our whole practice is around digitization and stuff. So we can help with any of your clients who have crypto investments. We can help with your clients if they want to accept crypto. I would love it if a dentist accepted crypto. I think that would be incredible. So please let me know if any of your clients do that. But yeah, we can help with anything on that side of things.
There's a question about offsetting like losses and gains in disposals. So if you have, like, if you trade Bitcoin and you have gains on Bitcoin and losses on Bitcoin, you can just subtract that. There, like the hourly basis, we convert, like if you buy Bitcoin in the past, we have the hourly price of that Bitcoin and we use it for the pool. If you buy something 5 hours later, we use that price then and add that to the pool as well. And then you sell it 2 days later, we use that price of that specific hour when you sell it to convert it. I think that that should answer the question. There's a few people how they can join Actan. Just reach out to info@Accointing or through Joe. He can help you there as well.
Yeah. Also, sorry, Dan, if you want us to stop, we can. Someone did mention, I did answer it on the Q&A, but typing, because I've answered quite a few of the questions by typing the answers, but I will just say, someone mentioned about that 5,000 transaction thing, that wasn't a rule, that was an example to show that even 5,000 transactions is minimal in the crypto space for a typical trader. I was more trying to give an example of what, the severity of the amount of transactions that are going to be in this space. There is no hard and fast rule.
James has asked around the kind of basics of cryptocurrency. James, I subscribe to a website called realvision.com. Unbelievable website for all things content relating to cryptocurrency. It's actually run by an ex Goldman Sachs hedge fund manager. And what we're finding is a lot of the kind of big hedge fund guys are moving from traditional finance into this space. And if you go into realvision.com, there's loads of great content in there. I watch it every night. It's really good.
Yeah, agree.
Yep. Sorry,
go on, Dennis.
One thing, someone asked if you can use Accointing for multiple clients. Yes, and you will get a special code from us to upgrade the accounts. The cool thing is that if you do the accounting or bookkeeping for your clients, they can just use this as well to sign into the mobile app. So we have not only a desktop application, but also a mobile app, which is really nice for them because you do the bookkeeping for them and they have their accounting portfolio always up to date and can just check it on the go and always have access to it. So that's a really nice combination, I think, and a really nice offering for your clients.
The one thing I'd say about that, Dennis, is it does need to be checked.
Yes.
Because people like me who don't have much experience when it comes to this sort of stuff, especially on the back end of appointing, is clients mess it up, and I've messed mine up, and Joe's been kind enough to fix it for me. So it does need checking for sure.
Oh,
yeah, I 100% agree with that. That is, Dennis and I have had multiple conversations around that and how to get that right. So again, we can help with that. Just a quick one as well, because I'm pretty sure that probably everyone's going to need to go in a second. Someone's mentioned about us having a crypto tax helpline. Our website's being built as we speak, and we will have a chat function within the website in order to be able to ask questions. And we're trying to build a bit of a ticketing system as well, so that if people want to have particular questions and queries, that they can go on our website, raise a ticket with one of our experts who can then come back to you. So especially in this space, a lot of it is ongoing and moving with the time. So not everything can be answered immediately. So yeah, we will be building that as time goes, so keep an eye on us.
Wakas has asked, today's session is being recorded. Wakas, what I'll do is straight after this, I'll upload it to YouTube and send the link out in the follow-up email so everybody's got access to the recording and access to the link.
And Dennis, I don't know about you, but I'd be happy to jump on that YouTube link at some point over the next few days to answer any particular questions if people fire them over. So, I could fully appreciate that we're not going to get to half of these questions here.
So Joe, Dennis, let's wrap it up. Thanks so much for your time today, guys. Really appreciate you coming in. You're both people that I've got to know over the last, Joe, you for the last few years, and Dennis, we've had some correspondence over the last 6 months. Two people that I really admire and really feel comfortable in recommending to our community and our audience. So thanks so much for your time this afternoon. Thank you to the 200 people still on the call with us. Thank you for your support. With the amount of online content available to us all, it means the world to us that you're supporting us with these types of events. So I hope you found it useful. I hope it was informative and can help you deliver a better service to your clients. And yeah, hope you can take some ideas and some education away from today's session. So thanks so much. Really appreciate it. Thanks, guys. Thanks, everyone.
Thank you.
Oh, thanks, Dennis.